Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner. With us, as always, to talk all things markets is University of Missouri, Scott Brown. Good afternoon, Scott.
Hey, good afternoon, Megan.
As we get started today on this Good Friday, a very light day. Futures markets wrapped up yesterday. There's just a little bit of cash trade going on today, and we'll talk about that, but we'll also take a look at the big report this week, which was prospective plantings. So let's get things started and recap what happened this week in the markets.
Yeah, on the cattle side this week, if we look at cash cattle, they were up nearly $2 this week. We also saw those feeder cattle markets stronger, anywhere from 2 to 6 higher on the week. On the future side, June live cattle futures contract was up about 75 cents, while the May feeder cattle futures contract was down about 40 cents. That weakness probably had a little to do with prospective plantings this week, as corn futures were up 7 cents for May this week. The choice box beef price gained nearly $12 this week. That actually now puts that box beef price above year-ago levels by $8. We had a lot of strength in things like ribs and loins and briskets this week in that choice box beef price. On the hog side, cash hogs, $2 higher this week. The June lean hog futures contract also up about 82 cents this week. The pork cutout value also gained nearly $2 this week. It now puts it $46 above year-ago levels.
That cash hog market really has been impressive and has continued its impressive climb in recent weeks.
Yeah, absolutely. So hogs and pigs, as we talked about, certainly I think was helpful as we had fewer hogs out of the report than many would have anticipated. But I also say pretty strong domestic demand continues as you see that pork cutout value continuing to move higher. It's nice to see these higher hog prices, especially as we've seen feed costs that have also gone up quite a bit as well.
All right, let's talk the big report this week. All eyes were really on that prospective plantings report, and a little bit of a surprise compared to pre-report expectations.
Yeah, that's right on both sides of corn, and I say both sides of corn and soybeans here in particular. You look at the corn number, USDA in the intentions report came in at 91.1 million acres. Most analysts were above that, with the average pre-report estimate coming in at 93.2 million acres. Even USDA's February outlook had 92 million acres of corn planted. So less corn than many of us would have thought going into that report. Also on the soybean side, less soybeans than we would have thought, as most forecasts would have suggested soybean acres right around 90 million acres, yet the report came out at 87.6. So tighter acreage planted. We'll see where we go from here.
When we look at that adjustment, is it really ultimately about a competition for acres, but a competition for dollars as well? When you look at, I think originally there was expectations or talk that cotton acres would decline, and those pretty much held their own. Can we anticipate more of that as we look ahead?
So I think so, and I think we could also see now maybe some more pull for additional acres to come in some parts of the country. Uh, to cotton in particular, cotton prices have certainly been stronger than maybe folks would have thought, so they've also moved up quite a bit. Sorghum acres also up pretty strong out of the report. To me, so we're chasing whether we can get total acres to go up, and I think the market's certainly trying to tell producers plant as many acres as you can. And so we'll see what we get by the time we roll around to the June 30th acreage report.
And I think the big thing that plays a factor too is Mother Nature as well. And we look at places that are too dry or places that are heavily saturated, and folks looking and wanting to get going.
So the spring matters, absolutely. And I think we're much more efficient at rolling acres in when it gets dry than we maybe were 20 years ago, but it still depends on what kind of spring we have. And I think for corn versus soybeans, this is going to come into play as well. If we get maybe later in the year, we're going to see more soybeans than we would have thought as folks make a shift away from corn. If they have that possibility, it'll all depend on what they got down last fall in many cases.
For our livestock producers, how much does that mean risk management and thinking ahead and trying to make sure now that baseball season is officially open, that they're hitting singles and doubles consistently and have a higher batting average.
Yeah, so I struggle with what to tell the livestock folks actually right now. I will say this prospective plantings report certainly didn't give us any opportunities to lock in some lower feed cost. I was hopeful perhaps we would get some pretty big acres and get some lower feed costs coming. Um, so maybe we're going to hold here a little bit, but you've correctly identified this all depends on weather from this point forward in my mind. And none of us are great at predicting the weather. We have some dry spots occurring in some parts of the country. If that were to continue to build, then we're not done going up in feed costs. And so I think folks have to manage that risk appropriately. It's just right now, I think it's tough to lock in too much feed costs, just given what's been another week of some higher prices yet again in response to prospective plantings.
We're going to talk, and we're going to switch and have a little bit of a consumer focus the rest of the way out. Restaurant Performance Index came out this week. As we take a look at that, really a bright spot in that February report.
Yeah, you look at the overall restaurant performance index for February 21, it came in at 100.1. So for the first time since the pandemic, we actually talk about the overall index being above 100. And remember, above 100 is expansion, below 100 is contraction in the way that index is put together. So really good news. That was about a point higher than where the restaurant performance index set in January. Now, tale of a couple of things here going on. So current situation, that index came in at 95.4, actually down slightly. So same store sales, consumer traffic, all continued to register again below 100. So contraction. All right. So the current situation still struggling to talk about growth, yet expectations. All right. We were up about 2.5 points on overall expectations out of the February 21 report relative to January. So folks are still anticipating as we come out of the pandemic that we're going to get some pretty strong growth happening. We need that to happen. So we haven't realized it yet, but the possibilities certainly look good as we move ahead in 2021.
How much are vaccinations and those types of things playing a role in this optimism? We saw what the CDC came out today and said they've relaxed their travel recommendations for folks who are fully vaccinated. Will that continue for at least for a while to play a role in us maybe seeing a rebound and a boost to our economies?
I think so. As more people get comfortable getting out and about, I think we're going to see that. I think there's a lot of pent up interest to be out, whatever that is for individuals, but more travel, more away from home. I think all of that helps in terms of food demand, meat demand in particular. And so I think there's a lot of positives coming now. If caseloads were to turn around and go back up, then we'll have to put that on hold a little bit. But I will say some of the meetings I've done of late in person, the crowds are very strong. Folks are ready to be out and about.
Is the supply side ready to handle that boost in demand?
So I think so both cattle and hogs, we're going to talk about probably, less growth or even in some cases declines in production. So it's going to tighten things up a little bit. I think we're seeing that a little bit in hogs right now. And again, you look at hogs and pigs from last week and it says we're going to tighten things up. Now, I think we could get some pretty quick recovery in terms of sows farrowed, et cetera. So I'm not too worried about being short on the hog side and cattle as well. We've been fairly strong in terms of, although not down significantly. So I think we're okay. But to me, it spells the opportunity for higher prices as we continue here through 2021.
And we will take it. As we wrap things up today, a jobs report today, another round of good news, and I'll take all the sunshine and good news I can take on this Friday.
Yeah, that's right. So pre-report, analysts were expecting about 675,000 new jobs, and we came in at 916,000 jobs in March. So very strong jobs report we got. Unemployment rate fell to 6%. Again, that seems to come into what we're seeing from the restaurant performance index as well. So what we're seeing in terms of jobs available, it's all pointing to a stronger economy and hopefully stronger meat demand. So that demand side to me, and I think domestic demand is important here is, although I think China's going to be good for us this year, maybe not as much growth as we would have seen, especially in pork trade as we did in 2020. So domestic demand being strong, I think is really important, and it could set the stage for a much better year than we anticipated as we kind of unravel out of this pandemic.
And that's a perfect way to promote our webinar coming up on Wednesday. We have our quarterly market outlook webinar. You'll be there, Lee Schultz with Iowa State, Daryl Peel from Oklahoma State, and taking kind of a look back at how the pandemic changed us as we're a year out, and maybe looking and talking about how that puts us on a different trajectory for the rest of 2021.
Yeah, that's right. You know, Megan, it's amazing. We think about the start of the pandemic was a long, long time ago, yet it was 12 months ago. So it's quite an opportunity to look back and just, in some cases, be amazed how well we've done despite a global pandemic that, frankly, shut down meat processing for a period of time. If you would have played this out, no one would have probably ever suggested we would have quite the resiliency that we've had from farm to retail.
I'll tell you what, this last 12 months for many people, myself included, is probably like the longest 84 years of my life.
Yeah. It's just amazing. It's like, I'll say the start of the pandemic, and I'm thinking years ago when it was months ago. So it's crazy what's happened over the last year.
In addition to us next week, that webinar is on Wednesday at 11 a.m. Eastern, 10 Central. You can register on our website. Go to brownfieldagnews.com. But there'll be a couple of other reports for us to talk about when we chat next Friday.
That's right. We get monthly trade data at the end of the week, and then USDA is going to give us a WASDA report on Friday.
Sounds great. We will see you on Wednesday, and we'll see you again on Friday.
Sounds great, Megan.
Have a great weekend. Happy Easter.
Happy Easter to you as well.
To have our weekly livestock market update delivered to your email box every Saturday morning, visit our website, brownfieldagnews.com. You can click subscribe. You can also submit questions and comments there as well. And to register for our webinar this Wednesday, go to brownfieldagnews.com and look for the quarterly market outlook logo, and it'll take you where you need to go. We look forward to seeing you then. Have a great weekend. I'm Megan Grebner for Brownfield.